Meta is coming off 18 straight days of gains, hitting all-time highs going back to the 2012 IPO. It has been a bright spot in the Mag 7 trade, and that group overall underperforming the broader stock market. S&P would actually be higher this year if you took out the Mag 7 names. Joining us to talk about that and the state of the overall market is Jeremiah Buckley, Janus Henderson Equities portfolio manager. His top holdings include Meta, NVIDIA, and Apple. Jeremiah, good to see you. Thanks for joining us.
Yeah, thanks for having me on.
I think it was one desk last week that said it's really the Mag 1, and it is Meta. I wonder if you'd go that far, and if you think 18 in a row has put it in an overbought position.
Yeah, so obviously Meta has had a good start to the year. It's amazing that they've had the winning streak that they've had. And certainly fundamentals have been strong. They had better than expected revenues. And so it's been deserved, and they've had very aggressive investment plans. And we're optimistic about that. And so, yes, the valuation has increased. It's towards the upper end of the Mag 7 names now, but we think that that is appropriate given the growth outlook. And so we're still positive on Meta. We also see Amazon is up so far this year, outperformed the S&P modestly. They also had strong results, and fortunately for them, they had good growth in AWS that was in line with expectations. And so still optimistic on most of the Mag 7.
What do you make of, what do you think the fallout has been from the DeepSeek news, the gut check on training costs, and then the subsequent reiteration or actual positive revisions on CapEx guidance in the past, say, couple of weeks?
Yeah, so we think we paid more attention to the CapEx guidance and the CapEx plans, and we think that the demand for compute is going to continue to be very strong. We still are very positive on NVIDIA. We think earnings growth is going to be quite impressive again this year. We're certainly paying attention to the DeepSeek. I think it was an interesting development. We certainly need efficiency to continue to improve in AI for this to continue to be a long-term growth driver. But we don't think at this point in time that's impacting CapEx plans, and we're still very positive on AI infrastructure.
I mean, do you think these are all just secular AI stories, or does it matter which way bond yields go and what happens with tariffs and macro for some of these stocks to work?
To me, it's the secular themes around AI that are driving these companies. If you look at, they all have extremely healthy balance sheets with lots of cash. And so I think within the market, they're less interest rate sensitive to the extent that the higher interest rates would materially impact the overall economic growth. Then they will certainly see some impact from small businesses, et cetera. But in general, I think it's really the returns on invested capital that AI generates over time and their leadership globally that will drive the stocks and their outlooks.
Finally, I know you can address some names in the consumer and travel space. We've been watching discretionary versus staples and whether or not that ratio is shifting and what that would mean longer term for the market and the consumer. But, for example, a name like Disney and their reliance on parks and experiences, where do you think the rest of the, at least first half of the year, is going to lead us?
Yeah, so we're still positive on travel trends. I think you saw with fourth quarter earnings results, and then you saw MGM report this morning with some favorable commentary. We think the consumer continues to spend on travel. Demand is quite strong. I think fortunately for the consumer, despite the recent inflation reports, some of the staples or part of consumer spending has moderated, and so they have more of their income available for discretionary spending. And so we think that consumer discretionary spending will continue to be positive, and travel continues to be really well positioned to capture those gains.
Yeah. Well, tomorrow I'll get retail sales, give us another indicator of where they stand right now relative to their comfort in spending the money they have. Jeremiah, thanks. Good to see you. Jeremiah Buckley.
Thanks for having me on.